Hey everyone, welcome to the Tech Grinder podcast, where we are breaking new ground when it comes to the startup ecosystem and pushing past the status quo. But before we get started, the podcast has been created for entertainment and educational purposes only, and nothing in the content should be taken as investment advice. To see the full disclaimer, go to www.techgrinder.com. That's www.techgrinder.com. So let's get started, and we hope you enjoy this episode. Okay, so let's get into it. For years now, there has been chatter and discussion about what we know as income inequality and the wealth gap. But there is something else that is brewing in our society and morphing, and that is the technology gap. The gap between the earliest founders, companies, and startups to the big technology companies. The gap is now enormous and is becoming more and more apparent as we move forward in the 21st century. Some of the problem is the complete focus on wealth creation, with our society overly fascinated with money and billionaires. We have to be curious and ask the question, do you think this mentality messes with true innovation? The current state of technology is locked into this type of thinking and is feeding into the wealth gap and income inequality. Over the last few decades in the U.S., we have been seeing the mass consolidation of business. Either businesses are being acquired, which simply means less players in the market. In the U.S. this past week, we heard about the dollar-type stores closing their doors. This cannot be good for income inequality and is likely to feed into the runaway inflation train, meaning folks that shop at these types of stores will probably end up paying more money at other stores. So over the last 2 decades in the U.S., when it comes to the mass consolidation of business, first we have seen market share consolidation, simply meaning the controlling stake in the market is going to fewer companies. Next is mergers and acquisitions, with data showing large companies acquiring smaller companies, which also increases their market share. Then there is the business formation rate, which has also been in decline over the last 2 decades. These are serious and complex problems that are going to be tough to solve and will require innovation. And it doesn't take much to realize that these problems are feeding into income inequality, the wealth gap, and the technology gap. So how do we move forward in the 21st century? The tech layoffs that have moved into a 3rd year have been brutal. In past episodes of the podcast, we have simply mentioned that we need a lot more founders, entrepreneurs, and startups. And when we say a lot more, we have always meant a lot more. But we are a strong supporter of micro, small, and mid-sized business creation, not just venture-backed startups. But again, the business formation rate has been in decline. So how do we inspire people to create businesses? How do we move the needle when it comes to business formation? One of the most interesting things about the creation of new business is when you hear the term business to business or B2B software company. These are businesses that sell to other businesses. That is their business model and is the source of their revenue. But for some reason, it is rare that you will hear them discuss business creation or how important it is to their survival. So what does it all mean? We have had a retracting job market and business formation is in decline. Is it an economic problem or something more systemic? Sometimes it feels like we may be looking into a looking glass and seeing a preview of the future, something that is long and drawn out and could become the new normal. In past episodes of this podcast, we have discussed that we feel the current way we have been creating businesses may be becoming a bit antiquated, and we believe that there are many possibilities and potential business models that could be innovative. But one of the dangers when it comes to innovation is when a company creates an innovative business model and their model is copied by the old guard, the innovative business model could be dragged right back into the antiquated business model, which could hurt innovation on a whole. The business world is tough, and with a technology gap that is growing, it means that a startup that is truly on to something really innovative and groundbreaking would have to scale faster than ever, and for the most part in stealth secrecy. This is why we feel it is important to discuss what we call the technology gap. But the business world always has a bright spot, and that is the micro, small to mid-sized business model that creates smaller businesses that create jobs and opportunity, but in some ways stay off the radar of the old guard. This kind of business formation is positive for economic growth. In some ways, these businesses are sheltered a bit from the technology gap, but not completely. Income inequality, the wealth gap, and the technology gap are serious problems that humanity is facing in the 21st century. One solution to this problem is entrepreneurs, founders, and innovators. Lots of people globally who are willing to take the plunge and risk, and a business world that is welcoming and inviting and not trying to stomp them out. We hope you like this episode titled The Technology Gap. Until next time, thanks for listening to the Tech Grinder Podcast.